So what is the data telling you about how the VC ecosystem is being hit by this?
Yeah, I think the data is really showing a very complex picture of what's happening in the venture market. At one end, you have seed deals and early stage deals that have been very strong, lower than 2021, but much higher than we'd seen historically. And at the opposite side of the spectrum, late stage has seen deal value plummet. Deals are very difficult to get done there because of the proximity to the public markets. So as we move forward, we're really looking to see, how that late stage is able to respond. Obviously, with the lack of IPOs, it's going to continue to be a difficult market. But overall, the core of VC has shown to be able to still get deals done.
Now, let's talk about the total money invested falling to a 9-quarter low. Where do we go from here?
I think, again, we really need to look at where that deal value fall came from. Crossover investors and public market investors especially had pumped so much capital into the venture market. The expectation of what VC was really got inflated in 2021. Now, as those investors have kind of pulled back, at least, especially from a dollar value standpoint, that deal value has dropped really significantly very fast. Last year, in mega deals, so 100 million and larger, there's $200 billion invested in, and 87% of those deals included investment from those private equity funds or public market investors that had not traditionally been part of the market. So I think when we look at a deal value perspective, that is where the decline has come from. There's still a lot of dry powder out there, and there's a lot of a high number of funds ready to make investments. While those investors are probably taking a step back from the market and slowing the pace from what we saw in 2021, that deal value decline is really right now coming from the very top of the market.
$290 billion in dry powder, to be specific. How long do you think they're going to hold on to it? I mean, when are we going to see this money more meaningfully being invested?
Well, I think, first of all, there needs to be some sort of certainty in the market, right? Or at least less uncertainty. Interest rates are still rising. Inflation is still extremely high. The kind of area where the market is as far as what the expectation of valuations from founders and the needs of valuation from investors is still a little bit dislocated. So we won't really see a meaningful amount of capital come back until that kind of deficit closes. From a dry powder perspective, I think we should look at that as capital for seed and early stage. That is not meant to support unicorns or support the ultra late stage that has come about in the last few years. So 290 billion is a huge amount of money, but more importantly, the high number of small investors that are in the market that have closed funds since the beginning of 2020, I think is going to be really important for a deal count, especially moving forward. But again, we'll be looking towards the public markets to help release some of the pressure that's being created at the top of the market before we really expect any sort of growth to come back to venture.
I spoke with Andrew Yang earlier this week. Obviously he goes way back, founded Venture for America, ran for president, has a lot of thoughts about the economy, and he thinks there's a long way down to go. Take a listen to what he had to say.
We have a ways to go on the downslope. I certainly think that folks should try and keep some powder dry. Make sure that you have enough cash to make it through for a little bit longer than you might hope.
So he's saying to keep powder dry for a longer period of time. How much farther down do you think this slope goes, and how do you think VCs are going to negotiate, not knowing how long this is going to last?
Yeah, I mean, as far as, we do see a lag in data from what we're expecting in the narrative. And so even from right now, I would expect deal counts to continue to slide and deal value slide a little bit more for a few more quarters before it catches up to what we're talking about right now in the beginning of Q4. As far as keeping dry powder, I think, again, a lot of that unlocking or getting that dry powder back into the market is going to have a lot to do with what goes on in the public markets. LPs are very overbalanced right now. They've been putting a lot more money to private equity and venture capital over the past few years. Now with their public portfolios very much lower than they were last year, I think they're looking at their VC allocation as a little overweight. And so, having those investors continue to hold on to dry powder, not call it down from LPs, I think is going to be very important until we again see a little bit more certainty in the market, see interest rates, stop rising, and inflation kind of start to lower and kind of get to a sense of balance throughout the entire market.